This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices edged up on Wednesday after steep losses in the prior session, as market participants awaited an expected vote on a bipartisan deal to lift the $31.40 trillion U.S. debt ceiling. Brent crude futures for August delivery rose 11 cents to $73.82 a barrel by 0013 GMT, while U.S. West Texas Intermediate crude, WTI, gained 8 cents to $69.54 a barrel. Both fell more than 4% on Tuesday. Brent's July contract, which expires on Wednesday, and the U.S. benchmark were on track for monthly declines of more than 7% and 9%, respectively.
Top oil exporter Saudi Arabia may further slash the official selling prices, OSPs, for all crude grades to Asia in July, a Reuters poll showed, despite the looming OPEC Plus meeting that could leave the door open to further output reduction. State oil giant Saudi Aramco may cut the price for its flagship Arab Light crude by about $1 a barrel in July, according to 7 respondents surveyed by Reuters. That would set the July Arab Light price at about $1.55 a barrel over the Oman-Dubai average, the lowest since November 2021.
Moving on to the top news in the energy sector.
Kazakhstan exported more of its oil to the European Union in the first quarter of 2023 than it did a year ago, data showed on Tuesday, as it supplanted some Russian supplies. The Central Asian country, which has become one of the preferred options for European refineries to replace Russian oil following an EU embargo introduced on December 5, sent 71% of its oil exports to the EU from 65% a year earlier. Kazakhstan's barrels are successfully supplanting Urals. For example, CPC blend, which mixing up with oil from Kurdistan, almost perfectly replaces the Russian grade, a trader in the Mediterranean market said. Oil prices have also come under pressure from concerns about the U.S. debt ceiling negotiations and fears of a debt default in the world's biggest oil consumer. A potential default would have catastrophic economic repercussions domestically as well as globally, which would have an adverse impact on oil demand, PVM Oil's Thomas Varga said. OPEC Plus has criticized the IEA, the West's energy watchdog in which the United States is the biggest financial donor, for releasing oil stocks last year, which it said was necessary to bring down prices given fears sanctions would disrupt Russian supply. OPEC observers also say the group needs nominal oil prices to be higher because of money printing by the West in recent years has lowered the value of the US dollar.
Next, we have the top news in metal markets.
Copper prices slid on Wednesday on weaker than expected Chinese manufacturing data, while heading for a second consecutive monthly drop amid a sluggish global economy. 3-month copper on the London Metal Exchange was down 0.3% to $8,101.50 a ton by 0155 GMT. The official Manufacturing Purchasing Managers Index, PMI, was 48.8 from 49.2 in April, according to data from the National Bureau of Statistics.
Futures prices of ferrous metals were broadly down on Wednesday as the weaker-than-expected economic data in China triggered a flurry of risk-off sentiment. China's factory activity contracted faster than expected in May on weakening demand with the official Manufacturing Purchasing Managers Index, PMI, at 48.8, below the 50-point mark that separates expansion from contraction, data from the National Bureau of Statistics showed on Wednesday. The May number eyed a fall of 0.4 basis point from 49.2 in April and also missed the forecast of 49.4. We will now look at the top news in the agricultural sector. The European Commission has increased its monthly forecasts for this year's European Union soft wheat and rapeseed harvests, while lowering its outlook for barley and maize, data posted by the EU's executive showed. For soft wheat, the EU's main cereal crop, usable production in 2023-24 is now expected at 131.5 million tons, up from 130.2 million projected in late April and well above 125.7 million harvested last year. For rapeseed, the EU's most produced oilseed crop, 2023-24 output was forecast at 20.2 million tons against 20.0 million a month earlier and 19.5 million in 2022-23.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.